So we're going to be seeing more LPs exiting. Spent the last couple of years cleaning up their cost structure, but now they need to grow again. And a lot of them are proving incapable of achieving the growth that they want on their own. So they're going to need to find complementary businesses to accomplish that.
Welcome again to the Cannabis Investing Podcast, where we speak with C-level executives, analysts, and sector experts to provide actionable investment insight and the context with which to understand the burgeoning cannabis industry. I'm your host, Rena Sherbel. Mario Naric, welcome to the Cannabis Investing Podcast. It's great to have you on the show. Thanks for coming on.
Thank you so much for having us. Appreciate it.
Yeah, absolutely. So you founded Motif Labs in Canada, a country that we used to talk a lot about, don't talk so much about anymore. Enlighten us on what Motif Labs does and a little bit about the Canadian ecosystem these days.
Yeah, thank you. I'm glad we're talking about Canada again. There's lots of exciting stuff happening up here. So at a high level, and I'm sure we'll get into it more, but Motif is a extraction-focused licensed producer up in Canada. We're the largest in Canada, and we're also a brand house. So we have 5 brands in market. Box Hot being, the star of the show, the number 1 vape brand in the country. Top 3 infused pre-roll brand in the country. We as an LP are the number 1 vape producer. Owning almost 20% of the market. And we're also climbing the ranks very quickly on infused pre-rolls. Any given week, we're second or third in the infused pre-roll segment. So we manufacture these products. We build the brands in-house. We ship nationally, and it's been very exciting. In terms of Canada, I mean, much like probably the States, there's a lot going on. I mean, the industry is extremely dynamic. It's very fast. A lot of innovation, a lot of brands launching, a lot of SKUs launching. It's pretty chaotic and it's quick. But if you just zoom out and kind of think about the typical cycle of a new industry, Canada's kind of firmly in that shakeout phase, right? It's the growth isn't exponential anymore. All the speculation is behind us, right? Poorly run or poorly positioned businesses are starting to struggle a bit. But it also means that the industry is maturing and the good operators have great opportunities in front of them to really kind of stabilize their position. So lots on the go, very dynamic.
Do you want to stay in Canada? Is that the goal, kind of short term and near term and long term?
There's a few different ways to look at that. Canada is our predominant focus right now, and we still have a lot of headway in Canada to continue to expand within our categories and enter new ones. But we are starting to have conversations beyond Canadian borders, a few different ways, right? We manufacture some minor cannabinoids that can get shipped internationally. We make THCA at scale, CBN, CBD, CBG. So we are starting to have some pretty serious conversations about getting those out into global markets. And we're starting to talk about how our brands could maybe go south of the border. That's really complex. I mean, it would need to come with a really tight strategic partnership because white private labeling and going across the border is a very, very difficult task.
So is that solely dependent on, I guess you're having some of those conversations now, I would imagine, and it depends on how the partnership shapes up? Yeah,
exactly. It's always a battle of, we want to make sure we have enough bandwidth and focus to continue to succeed in Canada. You have to be very, very focused to continue to, inch away at market share and remain profitable. But we are starting to have conversations with companies south of the border to understand whether we can, partner and look at taking not only our brand IP, but we have some very, very good manufacturing IP that I think could elevate some of the states. So preliminary stuff, but we're going to be treading very carefully and doing a lot of due diligence there.
So speaking of due diligence, a lot of what we talked about when we did talk about Canada a bunch was the prolific nature of the publicly traded companies and how they were going internationally and how they were getting into the States or planning to get into the States. And I would say for a while, there was a lot of excitement, right? This narrative is very well known. There was a lot of excitement and then probably overspending and over-promising and less understanding than probably many executives should have had about the nature of these things, which is to say that there's been a lot of disappointment in the public sector in terms of cannabis companies in general, certainly Canadian companies. And as the U.S. starts to possibly find its footing, Maybe not as soon as everybody would like, but as it starts to kind of grow into a more mature market, um, how are you thinking about staying private? Or maybe the first part of the question is, was it a difficult choice to stay private? Was it an obvious choice to stay private? And then as things develop, is that still the goal or still the desire or still the plan?
Yeah, yeah, absolutely. I mean, look, Canada went through like a pretty typical boom and bust on a new industry, and we're still climbing our way out of that. And there's a lot of assets to unwind. I mean, when you build so much of something that's so wrong, it takes a while to correct that. But in terms of our positioning, look, we started a little bit later. Like, we weren't first movers by any means. By the time we went to market, um, the industry had already changed. It was the nature of how we started this business, right? Me and my founder at the time found a seed round, and then we found our current investors through a second round, and they've become really our investor group along with our seed investor. They've supported us now since the beginning, and I think one thing is we've been fortunate not to have to go public because one, we've run a very tight ship, and we've spent very wisely, and we've used our investors' money very carefully. But two, we've also had very supportive investors that have been continuing to move us forward over the last 4 or 5 years. So it's just something. It's not something we ever needed to do and never really discussed. And our investor group is not it's not how they do business. They're a group of high net worth individuals that invest in private businesses and grow them to a certain scale with their balance sheets. And we've been very fortunate to do that. And I think that's been one of our advantages through the last 3-4 years where we've really been coming into our own. Because I mean, I don't think there was an advantage of being public for the last few years. And there's a lot of distraction. There's a lot of cost that comes with it. And so being private to date has been very advantageous to us, and we're fortunate to have been able to do that.
Yeah, it's something that we've talked about a little bit in California, which is, a market that's suffering a lot. And the companies that are best able, or some of the best companies that are able to navigate that, have been private companies. Do you feel that that's something? Are you looking at distressed assets? Are you looking at acquisitions, speaking to the number of kind of wrong deals done in the past few years?
Yeah, we have, right? We've looked around, and now more than ever, there is always a build versus buy conversation for Motif. Generally speaking, though, we're really well positioned with our team and our facilities to really continue to inch away and add what we need to continue to grow. When we've looked at some of the distressed assets, the complexities of unwinding that, integrating the cultures of those teams, baggage that comes along with it. I mean, we have a very clean balance sheet. We have a motivated team, and we have space to expand. So generally speaking, it hasn't really made sense for us because we do, we're rooted in manufacturing. And if we get into the background of the business a bit more, we were built on a foundation of like engineering and science, and so we're able to kind of advance our own processes pretty well. And then I think you asked, our plans on whether we would go public. I mean, it's not something we're exploring right now, partially because, again, we don't need to. And I think the way Motif goes from here to the next stage is more, over the next couple of years, is more through like strategic partnership versus go public.
Given your background and given the fact that it's not, a business background, what would you say you've most been taken with in terms of a lesson or an insight or something that surprised you, like maybe in terms of public versus private, or navigating that, or being dependent on the science that you have, kind of the strength in relying on that? What would you say that you've been most taken with since you've started things at Motif?
Whew. I'm taken with something every week at this place. There's lessons being learned all of the time, right? And it depends what part of the life cycle of the business we zone into. I mean, I think one thing, for me personally as an entrepreneur is, I'm an engineer. I did a bit of management consulting, but generally I've been in technical roles. And through starting this business, I've really progressed into, a product developer, marketer, kind of innovator. And that's been really great, right? That's something that I've learned that, I'm good at, I enjoy. And it's completely changed the trajectory of, where I see myself and where my career has taken me. So that's been really cool. In terms of the business, there's lessons every day, right? I mean, I think it's really about, you have to be very open-minded. You have to look at every angle. You can't ever, sunk cost fallacy is a terrible thing, and never go down that path. Just because you had a hypothesis, sometimes I'll have a hypothesis that I kill like 2 weeks after I've had it. Or we as a company, I mean, every quarter, if you sit down and listen to one of our quarterly business reviews, you know the rate of change that you have to adapt to this industry is so high. So being, stubborn, and we said we are going to do this, keep doing it. That's a really dangerous thing. So that's been very surprising, right? You have to be very nimble and adaptable and willing to say, hey, I was wrong, let's change.
And anything specific to cannabis, like in terms of the price of cannabis, in terms of regulations, in terms of dealing with international partners or waiting for America to get its act together? And anything that you would say that's kind of surprised you or been worse than you thought or better than you thought in terms of specific to cannabis?
Generally speaking, I think one thing I will say is, I think a lot of people complain about the regulatory structure, or some of the supply chain that's been set up. And for me, I've actually been very positively surprised at how quickly, I've obviously never experienced this to this degree, to begin something at, the pretty early stages of an industry, and then see the whole industry adapt. And it's just been, a lot of people complain about stuff, but I mean, it's been incredible what we've been able to do. I mean, to go from, hey, we've got a lottery system where we have 20 stores to, within 24 months, there's 3,600 stores nationally, for better or for worse. I mean, it's pretty amazing, like the entrepreneurial spirit to be able to like build all that infrastructure, to bring a whole new industry to life. I think that's been extremely, gratifying to see. When I started this, I mean, people barely knew what a vape was. There was no facilities, there was some greenhouses getting built, and now there's 5,000 SKUs in every single category that you can dream of, being shipped nationally. And it's been 4 or 5 years. I mean, it's insane. And it's really exciting.
So speaking to that, how would you say that that Motif has been able to not just navigate the market, but also take a lead and continue to grow share, especially when you're talking about competing with really well-funded, publicly traded behemoths of the Canadian cannabis landscape? What would you say is most significant in being able to catapult you there?
The boring side of it, which is, we've got a very well set up corporate structure. Starting with, if you just start with the fundamentals of, how we started, right? We have a private investor group who invested their own money, who are all, entrepreneurial, self-made people, that have been successful in the past. And so our DNA from the investor standpoint is very entrepreneurial, nimble, and they come with extreme financial discipline, risk management, right? And understand how to set up the incentive structure of a business to drive success, right? So the structure of Motif is such that, we don't manage based on market share, right? We manage based on EBITDA. What does it take to make money, to generate cash flow? Like, that's what we talk about all the time. And it's not, oh, no, we just need to do this, we just need to do that, oh, we just need to reach the scale. No. It's make money now and then scale. And so that's just been the beginning, from the very beginning. I mean, I'm very fortunate to have great mentors in our investor group, including my, executive chair, Glenn Henderson, who, I would say is my key mentor. And for a while, I would consider him almost my co-CEO. That's the beginning. And then the next part of it is the team that we have. I'm probably one of the only founding CEOs that's still running the business. I brought a lot of people in here that I trust. Motif is a web of people that know and trust each other, that are extremely dedicated and bought into the business. We've had very little turnover at the senior management level, if any, because we all have the same goal. And so, it's that stability helps a lot, right? When teams have turned over 5 times, it's hard to kind of understand what the vision is. So, and then I'd like to think that our team's very creative and has great intuition with where to take the products, right? We have a really, really talented team that really likes cannabis and knows what the consumer wants. And we just zero into that all the time.
In terms of providing what the customer wants, there's definitely a saturation in the market. It's kind of, as a consumer, it's hard to even understand what I want sometimes. It's so overwhelming. How does your team navigate that? Is it in terms of going out and doing market studies? Is it talking to people? How do you best navigate that?
It's everything. And, right now, you asked the state of the industry. I mean, it's more competitive than ever, but it's also, there's the most companies kind of disappearing than ever. It's a very interesting time in Canada right now. And you're absolutely right. I mean, there's so many SKUs. There's too many. And as we mature, I hope that gets actually contracted. But it's all of the above that you mentioned. There's the passion side of it, where we have people who really enjoy the products, myself included, and the key people that design and create the products. I mean, we have our own internal creative team and marketing team. All of our brands are homemade. We're not outsourcing it. Those people spend a lot of time in field at trade shows, go south of the border. I mean, I go to the States, 3, 4, 5 times a year for various things, but, I always make a point of going into those dispensaries and speaking to bud tenders. So you have to get out there and speak to your consumer, understand what they want, understand what's in the market. That's one, right? Then I think there's a lot of leveraging data, right? Like what are you seeing that's taking off, that's showing promise, or how are you finding white space in that data? And I think that's what Motif does really well. We found a regulatory opportunity to make the biggest vape in Canada 3 years ago, 1.2 gram vapes. We made this big, chunky, obnoxious, loud vape that pushed the boundaries of the regulation, and it just took off because it was a white space. So we're very good at finding and kind of exploiting white spaces. And then when we're kind of tackling more of the mainstream, it's you got to be eye catching. You have to speak to your consumer, and you have to execute really, really well. The good news is when there's a lot of noise, you can get into the top 20, 15%, just quality and execution, right? I mean, there's so many products that are bad, fail, and those rise, the cream rises to the top pretty quickly when it comes to this thing tastes good and it functions well. But it's a lot. It's a lot of conversations. It's a lot of pivoting, and it's a lot of data and consumer kind of engagement.
Maybe this is a silly question. Maybe this is an obvious question. Do you see your main competition as Canadian players?
Right now, yeah. Yeah. I mean, there are a couple US brands coming in. I mean, they've always been, but there's been a couple that have come in lately that have some promise, right? Some of your bigger brands down south. But at the end of the day, that's still our competition, still Canadians there, because they're selecting a vendor to manufacture that brand for them. So currently, yes, Canadian companies are our biggest competitors. Could that change? I mean, to date, there hasn't been big MSO movement into Canada. It could change, but yeah, and it depends on the product line you're talking about. It's not any one LP. We're fighting a lot of battles across a lot of product lines.
Yeah. What would you say? I'm not sure if you want to answer this question or how deeply you want to answer this question, but I'm curious if you have an opinion. What is the near-term reality for companies like Tilray and Canopy Growth, big Canadian players, big Canadian LPs?
I think it's a little bit case by case, right? I mean, they're not all made equal. I think the reality is that a lot of those big companies have spent the better part of the last few years right-sizing their operations, and unwinding, the mess that you said that, Canada had created early days, right? And that's been a huge distraction. I think some of them are showing that they've been able to stabilize, some of those costs, but, a lot of them are showing that they can't necessarily move as quickly or as nimbly to innovate and continue to stay on trend. I mean, I like to think that cannabis, a quarter in cannabis is like a year in any other industry, and it really is. And so I think the reality is that they're going to have to, a lot of them are going to have to strategically, acquire companies that can provide the innovation and the speed that they lack, I would say. Some of the bigger ones are going to disappear for sure. I mean, I don't have a comment on who's who and what's what. I mean, it's, some of them I thought would be gone a long time ago. Some of them disappeared faster than I thought they would. So that's always very variable, because you don't know where the capital is coming from.
You spoke about being really focused on EBITDA as a management group. What would you say for investors looking at the space, either in general or specific to Canada? Would you say that there are specific metrics that you would advise investors to be paying attention to right now?
Yeah, I mean, I think there's a few things, right? I mean, you obviously have to look at profitability, and you can't run egregious adjustments on it. I mean, I think there are some fair fair items to look at in an industry that's this innovative and fast. I mean, we spend a tremendous amount of time advancing our technology and building for the future. For example, over the last year and a half, we've really perfected making liquid diamonds and THCA, and that was a tremendous effort with a lot of R&D. There's a lot of investment happening in R&D to drive future revenues, which I think is something that a company, an investor needs to understand. Like, is this company continuing to stay relevant and pushing forward, and how is that playing into the financial picture? I mean, of course, you need to look at a company that isn't just burning cash ridiculously, right? So profitability has to be a metric. Another area is zooming out further and showing how does a business grow in growth phase, and how do they maintain and pivot in consolidation phase, right? The industry is changing, and success looks very different depending on what stage of the industry you're at. In Canada right now it's a dogfight, and so you need to be looking at who's able to maintain market share and simultaneously innovate their way to that next level of growth. Because a lot of people chase, right? Like, we launched these 1.2 gram vapes. we dominated, went to number one in the last 6 months. Like 6-7 brands launched 1.2s, and they launched them cheaper, and they launched the same flavors almost, and not as good as Box Hop, but like, look, that's noise. But what we've been able to do is we've got brand affinity and loyalty and staying power, but we're also one or two steps ahead, and we've got the next new thing coming to kind of drive the business forward.
Speaking to your last point, did you see cannibalization when those new competitors came to market? And how much cannibalization, and how much worries you, and how much do you feel like, in terms of what you have coming down the pike, sets you up, and so that offsets it? Can you speak a little bit to that process?
Yeah, of course. We see cannibalization all the time. And I think the key is it's one thing Motif does really well is, one, we innovate quite a bit, right? So we have a very robust set of revenue drivers, so that if one product line is getting significantly attacked, it's not taking the business down. So revenue risk is something we manage very closely. And yeah, like, if you look at Box Hot, we've been able to there's been a very deliberate attack on our brand, on our 1.2 segment, but we've been able to hold and actually grow market share, not at the rate we grew when we launched the brand, but still very impressive, because while everybody's attacking our 1.2 gram vapes, we had 1 gram all-in-ones, we had half gram all-in-ones, we had 2 gram vapes coming out that nobody else had, and so we create a bit of a moat. I mean, yeah, when you're running a business, you have to have a healthy amount of worry, otherwise you're not fighting the fights. But I think our team is very good at looking at the data, understanding where does our price need to be, understanding, is this a fight that we want to fight, or can we actually out innovate and look for a new space? And that's what Motif is. We set the trends. We don't, we're not the fifth one to follow a trend.
What would you say in terms of navigating different marketplaces? Does that involve kind of different approaches to products? When you're speaking about, finding partners in different countries, do you work out kind of what different products are?
Yeah, it depends on what marketplaces, right? I mean, there are some pretty dramatic differences in consumer trends in the States, between states, right? So, again, we're at the very kind of tip of exploring the States, and we are looking at kind of like what's winning in what states, and what are those brands, and what do they bring to offer, and like, where can our brands really fit within that ecosystem? When you look at somebody like, something like California, it's extremely crowded. It's extremely, it's very over-indexed relative to almost the rest of the world on these like high niche extracts that are true to the plant, live resins. I mean, it's crazy the amount of market share that those things occupy in California compared to, even Canada. But when you look at like Canada and some of the other newer states, I mean, the trends are relatively similar. I think it's really more about the execution differences. Like, even within Canada, when you look at Ontario, Alberta, BC, you have to deploy very different strategies to drive revenue, because of the way that the provinces have managed their let's say retail system. Just to give you like one anecdote, Alberta, 75% of that revenue is driven by large chains, and 25% is driven by independents. That ratio in Ontario is 50-50. The ratio in BC is the opposite. It's 25% larger chains and 80% independents. And so those are very different dynamics, right? One is very like street heavy. The other one's very much like how are you building your relationships with these category managers at these retailers? That would be the thing that worries me more about entering the States than our products. I think our products can fight the fight in a lot of these states. It's just understanding how to drive revenue in those specific states is it's it's not easy to figure out how to get your products on the shelf.
Yeah, I would imagine. In terms of looking at different products, what are you, I mean, I know that you talked a little bit about this. What do you guys have coming down the pike that you want to speak about kind of in 2024? And then how are you thinking about it beyond?
Yeah, so some of the newer stuff, that we, when we talk about, we're always pushing the envelope and thinking about the next thing. So, one of the big things that we're commercializing at scale and getting a lot of traction on is our liquid diamonds up in Canada. We have a very scaled process of making THCA and converting it to liquid diamonds, and the benefit of that is just extreme potency. We make 99.5% pure THC with that, and that lends itself really nicely to a few different types of innovation. For vapes, potency in a lot of cases does drive revenue for a subsegment. And so we're making these 95% potent vapes that have great flavor, and it's really a step change versus your typical 85% vape, and it's been received very well. But then THCA crystals are really nicely conducive to these infused pre-rolls, because you can add potency without adding so much of the oil and stickiness, and that thing can now vaporize really well and but still give you the potency. So Debunk is one of our brands that we're really championing liquid diamonds. I and our company are big proponents of is hardware, right? When you think about vapes, in particular distillate vapes, everyone's like, yeah, distillate's commodity. It's like, yeah, distillate is, but how you package a distillate vape isn't, right? It's, you have to get the flavor right, but even more so, you have to innovate on that hardware and that delivery mechanism, both from like how it looks visually and how it functions. And so we launched Rizzlers, which is our closed loop. We're taking a stab at the closed loop market up here. And, we've got a really good strategy there. We're 2 months in and we're really happy with how it's progressing. So the liquid diamonds and the closed loop for us have been really kind of fun vape innovations. In terms of infused pre-rolls, that's the big area. That's like, for me, that's like a kid in a candy store. There's so many different ways to to differentiate in that subcategory.
Can you kind of go into more detail about that in terms of the infused pre-rolls?
One thing that's worked for us is we've simplified one of our product lines. So a lot of people are going very complex, right? 5-pack, 5 flavors, keef coated, and that's hard to make, hard to execute on, and expensive to the consumer. And we found that there was an opportunity to just make, a very simple, very flavorful, cost-effective infused pre-roll in a smaller pack size via Rizzlers, and it's really taken off. So that's one where simplicity and data were the drivers of innovation. But then we have some wild stuff coming too. Like under Box Hot, we have these big pre-rolls that are infused with diamonds and flavor. They have a ceramic mouthpiece, and then the outside of the pre-roll is coated in THCA crystals. So that's like one puff of that and I'd be out. But there's a consumer for it, right? And it's it's this 50% potent pre-roll, and it's very Box Hot. It's obnoxious, over the top, and it really stretches our technical capability.
So, speaking to the US and what's going on over there in terms of it maybe being opened up soon, it maybe not. I know that you have some feelers out there, but how much attention is paid to what's happening in the US markets?
We have sources to remain informed, right? So that we can get the latest without spending a lot of bandwidth trying to figure it out. And, generally speaking, we stay informed because it's very relevant to everything, right? I mean, as the US opens up, or there's rumors of it opening up, or there's progress, I mean, that changes the position of the capital markets, which is something that, obviously impacts all of cannabis, positively. So we're definitely not, closing our eyes to it. But we're also recognizing that there's no crystal ball that can tell us what's going to happen, right? And so for us, this year it's about staying informed, understanding who's who down there, and like, who's really succeeding, who shares a similar vision to ours. But for us, I mean, the way we started, first isn't best, right? Motif was nowhere near being first, and I'd like to say we are the best in terms of extraction in Canada. And so, we like to see how things unfold, and then we find our way into it versus speculating. Speculation is very expensive.
Do you think the first mover advantage is a fallacy, or do you think it just didn't work out that way necessarily in cannabis?
I think the first mover advantage on a macro level is a fallacy for the most part. When there's so many unknowns, you're bound to make massive mistakes. Now, there is benefit to like first mover advantage in categories, but that's generally not based on complete guesses. It's based on uncovering what's missing in the data that you have. So I think first mover advantage is very, very powerful where there are knowns and variables that you can point to say, oh, this is why this is going to work. But when you're just like, yeah, this is what we believe the licensing is going to do. I mean, in Canada, it's like people built as though there was going to be 5,000 stores on day one, and then ended up with all sorts of inventory. It's like, yeah, that's the wrong bet, and being first there really sucks because then you're stuck with a bunch of very expensive inventory that you can't move.
Yeah, I think we've definitely seen a lot of that.
Yeah, yeah. So, and then you have to right size your bet too. I think that's the biggest thing. Like you can be first and you can be early, but like be cautious.
Yeah, that sunken cost fallacy that you pointed to at the beginning of this conversation, I think is definitely something that's become evident across the sector. Speaking to knowing how to build or learning how to build and when to invest, at the end of 2023, you guys appointed your first chief manufacturing officer. Can you talk about the decision to hire one? Can you talk about the hiring and how that's going and kind of thought process of what's behind that?
Yeah, thanks for noticing. Yeah, it's we've always been kind of sales before scale mentality, and we've always been very creative in the way that we progress ideas without overcommitting. Right? It's really hard, right? But it's like, hey, you want to take a bet, but you want to like mitigate that risk. And so it's like, what are these like? Almost, I always like to say, like, what are the tiers where we can pull out, and how do we get 80% of the way there with 15% of the money, right? Has been our mentality. So in terms of just like our thesis there, in terms of hiring and people, Steve Nazarian, who's now our chief innovation officer, was our chief of operations, and he covered everything, QA, running the manufacturing, bringing new products to life. And so what we really found was we reached a scale where two things needed to be true, right? We need to continue to squeeze efficiencies out of our core processes and drive profitability through, making more with less. And that's what the manufacturing side of it is. But we cannot take our eye off the prize on being nimble and creative and innovative and launching new products because this industry is extremely fast. And so what we needed to do was really separate those two functions. We needed to let operations perfect operations, make sure inventory is under control, drive costs down. And then we needed a team who's taking all the great ideas, piloting them, and then integrating them into operations. So it was something that was really required. And Andrew was a great hire. And I mean, he comes with a background from, German auto parts manufacturing. He ran a 700-person facility, and the processes and the efficiencies that they had are on another level, and he's helping elevate us there. And we recently also onboarded a full-time CFO as well, because again, we're a big business and there's a lot to unpack, and the whole company needs financial leadership and mentorship. Hiring's good. There's departments that are tricky, but generally speaking, I've been very happy with the talent we've been able to get and retain.
Was it harder at the beginning to retain the talent that you wanted or to even hire them in the first place? Has it gotten easier as the stigma has kind of dwindled a bit?
It's been different challenges, right? The early days was I brought in several people that I knew and trusted, and so I was very fortunate to have a network that could deliver the skills the business needs, but also are people that trusted me, and all of those early 4, 5, 6 people are still here, and they're key leaders in the business. When you hire good people, then there's lots of people that they've worked in the past that trust them, and then they create this web, and there's this, hey, come along with me to this new ride. And so we again, when I hired Steve, he had been in the industry for 3, 4 years, really well respected, really intelligent guy. I'd known him for already 4 years 3, 4 years at the time, and he created a whole wave of people that wanted to come. And then when Andrew came in, he brought a whole wave of really talented people. So, when you hire really good leadership, the knock-on effect of the people that you get as a result of that is huge. So look, it's there's been ebbs and flows, right? I mean, I think the lower levels are really tricky. That's where we've challenged, the most challenging, the attrition at the, associate level, because there's so much manufacturing in the area. COVID was crazy. Everybody was getting these payment checks. Like that was really challenging when people were getting, payments from the government for a couple of years and had to take care of their families, and manufacturing was blowing up. right? And like it was crazy to try to find, the lower level, but we've made our way through it.
So let's say that we're talking a year from now. How would you say, let's say things are green lights ahead and things go pretty well. What does that look like for Motif Labs in this coming year?
Internally, right? We have some strategic objectives that we're chasing, right? Like, this year we're not we had really explosive growth, but then when that denominator gets bigger, you can't have that same percentage happen every year. So our growth expectations, we have strong growth expectations. We're looking to grow another 15, 16, 17% this year. Which is a lot when you're, the sixth largest cannabis company in the country, and we don't even participate in half the market, which is, still or 40%, 45% still flower and non-infused pre-rolls. But what our strategic objectives this year is to expand the robustness of our vape revenue. So, move the percentage that's tied to, like, the distillate and box hot, which has been great, and we're going to maintain that market share. But really grow that liquid diamond subsegment, really grow our pod sales, and start entering live resin. We've commercialized hydrocarbon. In the second half of this year, we're going to be moving into live resin and really starting to kind of stake our claim in that space. On the infused pre-roll side, we have big goals. We're number two. But the gap between number two and number one is pretty wide, and we're going to be narrowing that gap aggressively this year. It's a complex product category, but we are now really well positioned. We got our second facility licensed. We have perfected manufacturing these things. We've insourced. We were outsourcing a lot of our rolling and some of our keef application last year, and we continue to do so with fewer vendors. But we've insourced a lot of it, which gives us a lot of control. So this year we're very focused on increasing our market share in infused pre-rolls by 50% or so, and those two things together are the key drivers. And then we're planting some seeds to kind of expand our addressable market as we head into 2025. But those are the focus areas.
And what are your thoughts on the broad Canadian picture in the next year or the next couple of years? How do you see it growing, or what has you concerned about it not growing enough, or speaking to the regulations? Any kind of how are you thinking about the macro Canadian picture?
So like I said, we're kind of in that shakeout phase. So, and you've already seen it at the beginning of the year in Canada. There's been a few bankruptcies, CCAAs that are happening. I mean, that those dominoes are starting to fall, and they're gonna fall pretty quickly. There is no capital in the space, and there's, when you don't pay the CRA, when you don't pay your taxes, they shut you down at a certain point, right? And there's been companies that have been reaching that point, increasingly so. So we're going to be seeing more LPs exiting. While I really feel for the people, that are in those businesses and working for those companies. I mean, I think it's something that needs to happen. So that to clarify the industry, to mature it to a point that makes sense. So that's happening. I think there's always lots of questions about regulatory changes. We're not oblivious to the risks, and opportunities there. So we're really watching closely on the vape legislation. There's lots of conversations about what flavors are going to be changed or cut. It's really hard to understand where Health Canada is going to take that. You look to nicotine, but nicotine's a totally different beast. But we have our backup plans to make sure that we're not left hanging on the regulatory. But you have to keep a close eye on regulations, because that's the one thing that can happen very quick and have big impact. And I do think there's going to be more consolidation, right? I mean, you asked, what are the big LPs going to do? Well, they spent the last couple of years cleaning up their cost structure, but now they need to grow again. And a lot of them are proving incapable of achieving the growth that they want on their own. So they're going to need to find complementary businesses to accomplish that.
Do you have people working with the regulators, or advising them, or kind of partnering with them in some way? Or
we're engaged. We have a seat at the table, right? I mean, we're a very large LP. I personally, the provinces will some of the executives at the provincial levels will call me and ask me my opinion on certain things, and I'll sometimes unsolicited also provide my opinion on elements, because you have to engage, right? Because at the end of the day, like, everybody's just trying to make this work, right? That's what you have to realize. Everybody's trying to make this work. They have a mandate to keep it away from children, to keep it away from the illicit market, but they also have a mandate to make sure that it's a profitable industry. And you have to participate in that to educate these people, right? It's very complicated. They know more about cannabis than I do about being a regulator. So like, how can you expect them to know everything? And you have to participate. So we do. And then our chief of innovation has a head of regulatory under him. They manage the risk of regulatory. So they're always, interpreting the Health Canada regulations, and interpreting their response to certain moves. We are filing. There's a process to file. There's always file, recommendations or even complaints and say, hey, like, look, you guys dinged us for this, but like, there's these 5 brands that are really pushing the envelope. Like, what's the deal? Is this okay or not? And then we're part of a lobbying group, and that's been brought together. Steve's a part of it, and just keeping an ear on the ground and banding together on the issues that matter. So we're engaged. We're probably not as engaged as some of the big public companies, but we're definitely there and understanding the risks and providing our opinions.
Appreciate that. So as we come to the end, I'm curious if you have thoughts. Most of our audience is retail investors. Speaking to retail investors in this space, how would you advise allocating their money? Like, you don't have to say specific names, although welcome that. But in terms of kind of like, how would you think it would be like a certain type of company, a company in a certain type of space, a Canadian company, a US company, an international, how would you synthesize that, speaking to the public companies in the space?
I think the way that I would answer that question is, it's going to be relative to Motif and in Canada. But, one thing that I've noticed in the conversations that I've been having is that because of the headlines of Canada and because they're driven by, big pubcos, and because of how long the industries has struggled, a lot of people in this, in the US or international have maybe written off or they're just like, yeah, Canada's a mess. But what I would say is that's not true for the whole industry. Motif's private. We're the largest private business in the country. We've been profitable for 3 years. We're free cash flow positive right now. And, there's a way to succeed here. And it's actually a very good market. It's about to become an even better one. And, when you look at Canada relative to the States, sure, we have our challenges, but they're challenges that were built because we had federal legalization and a lot of money came in, and then that created a lot of confusion. But when I actually look at the structure that Canada has, it's a very protectable structure compared to some of the States. Like, I was just in Benzinga, and it's like I'm talking to these people and they're having to battle these like gas station vapes that are being made from like CBD. Like, there's all of this cowboy stuff that's taking share away from the legal market down there that we don't have to contend with. Like, there's lots of barriers, but then once you're in there, you're protected. Same thing with retail. The government pays us, right? They're the ones in between us and the retailers, and we always get paid. We're not chasing retailers to make sure we get paid. So Canada is a great market. The structure has been set up to succeed, and when you succeed, it's very protectable. So that's just one. I'll just say, don't write off Canada. We're succeeding in it. There's lots of smaller private businesses here that are really doing well. And I believe over the next 12 to 24 months, the ones that are doing well right now are going to do extremely well. And I have to say, selfishly, extraction, right? Extraction, right? 2.0. That's where the industry is going. That's where you can differentiate. That's where you have way different ways to change your product. Making really good genetics that really stand out at scale is not easy to do. But taking nice hardware, nice flavor, cool branding is, there's a lot of different ways to stand out.
Well, appreciate the conversation, Mario. And I would say that investors looking at the space, there's many, many negative headlines and many kind of bleeding companies to look at. And there's also some points of light. So appreciate you taking the time to share some of the points of light happening in Canada. Anything that you want to share with listeners about if they can get in touch with you or how to find out more about Motif, happy for you to share that.
Yeah, thank you so much for the time. I appreciate it. Motiflabs.ca is our website. I welcome any of them to reach out to yourself directly, and then I'm happy to have you share my contact information. Look, I'm a big believer in Canada. I'm a big believer in Motif. We've succeeded up here, and we're really excited to continue to grow and expand. And we're having lots of conversations with U.S. operators and global operators, and we're happy to continue to do so. So, thank you for giving us a voice on your podcast. I appreciate your time.
Yeah, absolutely. And hopefully we'll talk again and see kind of what's happening in Canada and give us an update on what's going on at Motif and north of the border.
Let's do it. We're going to have a big summer, so it'll be good to catch up after that.
If you're a serious investor, here are 3 reasons you should be using Seeking Alpha. We're the only platform with coverage of all significant stocks and ETFs, the only platform providing news, analysis, ratings, and data on stocks and ETFs, and we have the highest quality community of real investors. Find out more at seekingalpha.com/subscriptions. Thanks so much for listening to the Cannabis Investing Podcast. Subscribe or follow us on Seeking Alpha, Apple Podcasts, or Spotify. We'd really appreciate it if you left us a review on Apple Podcasts. It helps other investors find our show, and it makes us feel fantastic. If you have feedback or questions, we'd love to hear from you at RENA+CANPOD@seekingalpha.com. Nothing on this podcast should be taken as investment advice of any sort. And yes, I am still long. TrueLeaf, Chiron, Issercan Biosciences, the parent company, Air Wellness, and the ETF MSOS. Thanks so much for listening.